Hi, I'm Shane Benga with Mana Group, and today I want to talk to you a little bit about loan assumptions, both the pros and the cons from both the buyer and seller perspective. So the mechanics of how this works is sometimes confusing for many consumers, both sellers and buyers. So let's take that there's a $400,000 house that's for sale. An owner has owned that house for 2 years, and they originally took out a mortgage, VA mortgage, for $350,000. In that scenario where they're trying to sell for the $400,000, a buyer must come in with the difference in that price. So they can assume their $350,000 loan, and then they need $50,000 cash to pay the difference in the asking price. There are some loan options and banks out there that will offer a loan on that $50,000 gap. Typically, you'll be able to find 90% of that. Okay, so that's how some of the mechanics of this process work. There is some public perception around this that people are scared or nervous to do it. It's extremely advantageous to both the buyer and the seller. You have a buyer who's able to save money and purchase a home for less monthly cost, and also ultimately save money in interest paid. And a seller is able to get the purchase price that they so desire to exit from the property that helps make them profitable in their ownership. So public perception, there's some fear, will the bank allow you to do this? Trust me, they will allow you to do it. And by law, with VA and FHA, they're required to offer that option. Some frequently asked questions as we help people with this process are, how long does it take to close? Typically, we're seeing between 2 to 4 months for an assumption to take place. That means the purchasing process does take longer than maybe your standard 30-day process. We do have solutions for that. We've helped customers do what we call rent backs. So a buyer has taken early possession and began to pay a rental fee, which helped cover the seller's mortgage. That's typically advantageous to everybody involved. Also, another big advantage for buyers and sellers is that the closing costs to process one of these is drastically less. You're not paying loan origination fees, you're paying less for all those loan lender costs that you typically pay on a purchase. For a buyer who's looking for an assumption, there's many benefits. First and foremost, being able to assume a 3% interest rate allows your monthly mortgage payment typically to be much less than the average for the average price home. Another major benefit is that usually a seller has carried this loan for anywhere between 2 to 5 years and has been paying down the interest that is due on that loan. So there is a substantial amount of savings over the 30-year process of a typical amortized loan. The major advantage to sellers is the price that they can sell their home for. Today's market is definitely not the seller's market of 2020, where you could just stick a price up and sell it for whatever you like. And people would offer you thousands and thousands of dollars over your list price. If you have a home that is worth market value $375,000, but you have an assumable loan, it's reasonable to think that you may be able to get a little higher market price, close to $400,000, if a buyer is able to assume a large portion of a loan at 3%. That's a major advantage. So for the seller, the biggest advantage is getting the purchase price that they so desire in today's market. So there's a difference between informal assumptions and formal assumptions. We're going to table the informal, and today we'll just talk mainly about formal assumptions. Any loan, an FHA loan or VA loan, is typically assumable. On most cases, conventional loans are not assumable. In today's market, there's a huge benefit to all players with people who have a VA or FHA loan at a very low interest rate and can be assumed during the sale process. Okay, so if I could simply sum up this process, I would say it's as simple as if I owned a house for $400,000 and had a loan on that as well that was in my name, I could take that and sell that to John Smith. He could take ownership of the house and take ownership of the loan, and I get out from underneath both obligations. It is a little bit more complicated than that, but we are the experts in this and can help you navigate that process.